Hello, Warriors. News of the day, CPI came in weaker than expected. So we're getting a little relief rally in a lot of different markets with what's happening with CPI. Start off here with the euro. I see this as a potential false breakdown. If we get back over the 17.5 level, it's still possible that we could get one more shot down towards 1680 or so before we get more upside. So the dollar's off a little bit with this going on. Also the yen, when the yen's going up, that was part of the bear case in gold, part of the bull case in interest rates, right? Don't they almost look identical? There's the yen, that was the yen, here's the 10-year. I'm not expecting this to be the end of the move in either. Just a little bit of a counter trend. I'm sure there are some dollar bears that are hoping this might be it. And, I wouldn't be surprised if we start heading south here in the dollar index down to about the 92.5 level. But when you look at it on a 4-hour basis, we did confirm up here. Good time to just step aside in the currency markets and wait to see if we get the false breakout happening here in euro. Actually, if you want to try the short side of the dollar, it's a very tight trade. You could buy right here with stops about 40 lower under 1706. Most people are looking for cable to outperform because, look, cable never made a new low like euro did. And people are calling this somewhat of a bull flag. So it's a possibility that we get some type of upside move here in cable. There's your flag line coming in at 139.26. Looking at Canada, I think we're on our way back down towards this 123 level, which is something I've been talking about for a while. That's going to come in, we're 180 pips away. So dollar weakness, you would think would prevail with this pullback in Canada. This looks like it was ABC for A with a failing rally to 26 and on our way, I think, to 23 for an important buy. So right now, this looks corrective in Canada after this big move we had to the upside. Plus, the WTI has become two-sided. We're getting a little bit of a bounce from support, but overall, this looks like a pretty negative formation. Should we break down under this descending triangle, let's call it 65.40, then you're talking about crude trading in the mid-50s. So this may be coincide with the pullback in USD CAD. Maybe we get a little bit more up before the breakdown. I do expect WTI to break down. We could rally, all the way back up to the triangle line, but right now it's looking kind of like a weak bounce. So how do I know it's a weak bounce? Well, all I have to do, the market's memory is to the left. Look what happened last time we touched this support level. Within a couple of days, look at where we were. So here's same area, not as much momentum off support. So right now it's kind of a weak rally. I'm not saying it can't continue for a while. I don't expect it to have this kind of momentum. And then once we have a breakdown and say Canada's down at that level, I think that Canada could make a move all the way into, say, the 132, 133 level next stop. So I'm stalking it and still trying to be patient, waiting for the 61.8 there. And with that going on, Aussie's looking pretty good. Looks like we're going to make a move up towards the 75 level, possibly even 76. So we'll see what happens with this correction. So down Canada, up Aussie. Kiwi even looking a bit stronger, making higher lows instead of kind of a flat support level at 73. But dollar looking weak, should be supportive for equities, actually supportive for everything. So let's take a look at the gold. So after the big flush, gold's fighting its way back. Is this going to be the bottom? I doubt it. You could have some type of retrace after a big move like this. We're not even back to these levels but you could have something like an A and then a B, maybe back to 1760 and then sell off again. Like I said yesterday, both gold and silver were in an auto wreck and they're trying to reset. In fact, silver's trying to hold this 23 level, and I still think that we're going to take it out. Maybe we rally up towards 24, but I'm not confident in this low holding, or at least I'm going to give it some more time to back and fill. So when you have a couple of days like this, you're going to have a lot of inside days within the range of this big candle here. It's a huge candle, probably one of the biggest on the chart, except when you go back to the highs. So haven't pulled the trigger on this. I want to see some more action in there. One of the weaker metals today with yields coming off is copper. So copper is bouncing a little bit, but pretty anemic. And this is something I talked about from the 460 level, that perhaps we were putting in some type of head and shoulders top formation. We never got down to the neckline, but this was the right shoulder call. It's still developing. And anyway, this looks like a fairly weak rally. Maybe we get another a couple days up, but I am looking for a breakdown under this 420 level in copper. We had a new all-time high in the S&Ps today after the weaker CPI, and we're starting to reverse right here. I think you could sell the S&Ps with stops, say about 44.60 right now. In fact, it'd be classic for the market to fail from there. The Nasdaq yesterday, this was a candle while I was live streaming. I said you could short it. It was at 151.35. I said have a 50-point stop, and within that 4-hour candle, you had the market going down 130 points. So if you didn't make money on that trade, trail your stop or take partials. I don't know what I could do to help improve your trading, but looks like we're having potentially a little failure here, and this would be the second lower high in Nasdaq. Nasdaq is the one that's much more sensitive towards interest rate moves, and the breadth in Nasdaq has been miserable, with Nasdaq making new highs, and breadth in the Nasdaq. There were many times with Nasdaq 100, the Nasdaq making new highs when the AD line was actually more decliners than advancers. So I don't think we're done. I think there's going to be a little bit of a reckoning, mainly in the S&P, in the Dow, but the S&Ps are definitely fading here, and they're not confirming. Okay, let's check all time frames. 2-hour not confirming, 4-hour not confirming, daily not confirming. I'll even go to the micro. The 15-minute is the only one that's confirmed, and really hasn't confirmed, but over 70 here. So I'd be very careful. I was on an interview on stockcharts.com, and I was talking about how people have finally gotten to the point where they're not hedging. They're not buying insurance because it ends up whatever they pay for premium eating into their ROI, return on equity, ROE as well. So they think it's a waste of money. Well, if you own a home and you have fire insurance, you're hoping you don't collect on your insurance policy. That's what insurance is about. But if there is a fire, you're covered. So I still think with the VIX this cheap right here at 1641, I do want to point this out. There are sentiment indexes. One that I follow is the DSI, and the VIX only has 10% bulls. So I know when you look at it short term, it doesn't look great, but we just made a new high in the S&Ps, right? And we're still up 10 handles on the day. And look at the VIX. I mean, we're not even close to these lows yet, right? And you look at a weekly, let's see what the 1 week off number would be. If we close by Friday and the VIX back above 1823, you'll have a 2-week reversal. I would not be selling volatility here, especially with the fact that the VIX is holding well above the early July lows, late June lows. Remember all these little ghost trades and these kind of wicks that I was pointing out before we had this kind of move. Now, we're not seeing it here yet, but I actually think that the VIX is a good spec here for some type of correction to occur in the market. Let's take a look at a few other things, taking a look at TLT. So, we had benign inflation numbers. So I'm sure a lot of people are going to come out and say, oh, it's transitory. I don't think it's transitory. But should the bonds bounce from here, I don't think TLT will get over 149. When I look at this, it still looks pretty vulnerable. I was talking about it last week, and why can't we see new lows in the bond market? When you look at the weekly, right back to prior lows. So I'm a bear in global bond markets, even domestic bond markets. I think are starting to show some signs of topping. Here's your junk bond market right here. Looks like it's starting to roll over a little bit. This is your high yield debt. Okay, so pretty good break in the last week or so. And here's your high grade corporate debt, even looking weaker than junk. So this is really one of the biggest bubbles in the world. And why is corporate debt such a big bubble? It's partly because of financial engineering. And many companies have gone to the debt markets, either to have a war chest or use it for buybacks, financial engineering, including buybacks or dividends. But there's a huge bubble in corporate debt. A lot of people comparing the corporate debt market to what the housing market was like in 2008. So if there's going to be a bubble that pops, it's going to be here in corporate debt. And comparatively, this was a weak rally. It's funny that junk bonds even had a stronger rally than what's supposed to be investment grade corporate. So I keep an eye on these things to give me an indication of what could happen in other markets where interest rates are very much important. A lot of people say it's all about yields, and that's why we've had this tremendous prolific bull market in stocks, is because there's no yield and people were forced out on the risk curve to find returns. So it's my view that this pullback in the end is not the end of the bull move in the end, because I think the yen will continue to trend higher when interest rates get back in gear. And even after this benign report, look at what we have going in the 10-year. We had the reversal week, which I talked about last week, the potential. After we had this day, all we did was take out this prior low by a bip, and now we're on the verge of breaking out above the 9-day, which kind of looks like a bull flag if you draw it here. And I think the potential is up towards 215, and not by the end of the year. Everyone says by the end of the year. I think it's going to be in a hurry, maybe during the summer. Before Labor Day, we could be up there at 215. So sell bonds on strength. I don't like the debt markets. I think that they're really going to be the cause behind any kind of deflationary move in different asset classes. Real estate's doing great, but it's had the advantage of lower rates. What's going to happen when rates start to head up a little bit more? I think that could be a problem for real estate. I think it could be a problem for precious metals, as it's competition for the precious metals, and could eventually, as we're getting this fade in the Nasdaq now as we're talking, problem for the FANG stock. So you tell me what's holding up Nasdaq. Let me just give you a quick look at some of the main issues in the Nasdaq 100. FANG, here's Apple. So Apple's trying to recover. Been moving sideways for quite some time, and under 140, the wheels will come off in Apple and Nasdaq. Perhaps it's got one more high. As you can tell, we did confirm at this high, a lot of momentum. Maybe we get one more high, but looking at this on a weekly, you have a third three drive to a top formation, and under 140, Apple could see 127 easily, and who knows, maybe we could even pull back to the pre-COVID highs that we had in Apple. So there's Apple topping out. There's Tesla not doing much, broke out that triangle. Here's Amazon, had a very negative earnings report. This was a darling of Wall Street. It was lower. Here's Microsoft finally diverging on the daily after making a new high up here and heading down back under this 282 level. It's going to look pretty vulnerable to me. Here's Google, one of the better looking charts. Maybe it has a shot for another high. We'll see. This could also be a failing rally here in Google. So I don't know what's going to generate the next big move. Netflix looks heavy. Here's Facebook. Facebook left an island top. Looks like it's rolling over again. So my preferred short is going to be is still Nasdaq 100. Here's the Russell from its recent low, false breakdown at 208. It's got to start closing back over 226 to get my attention. Otherwise, we're still in a nightmarish sideways range for quite some time. Russell looks like a non-trade to me. Maybe you do strangles where you sell calls and sell puts and just collect the premium on the range. Let's take a look at what's happening here. So here's the junior silver miners trying to hold right back at the breakdown. Again, I still think that there could be more left on this to the downside in silver. So I'm just going to be patient with it. And I do have a great interview with Helene Meisner tomorrow. Invite everyone to watch us live on our YouTube channel or come into here on tradegatehub.com. Bring your questions and bring your charts, and good luck on this euro. We start taking out 1750. You have something. I'm going to wait and see if we could get one more dip, because I really wasn't that impressed with a 22 reading or a 24 reading on the 4 hour. And this did not look bad on the 2 hour, but I'm going to be patient, let the market prove itself to me. Around 1680, I think I'd be a little bit more interested. One more dip in the euro to try it to the long side for a scalp. So as we've been talking, Nasdaq continues to fade. And this is a very important area in Nasdaq. We take out 14.9. It's going to trigger a move. You have a wedge line up here. You have a moving average up here and back under 14.9. It's going to trigger a move to what was the 3 drive wedge line, or you could even call it a megaphone. So here we go. Back under 14.4, right around there, 14.460. Let's tag this low here. Okay. You're going to have, I think, a major sell signal. I call this a throw over. Okay. So here was drive 1, here was drive 2. Instead of third drive, we continued up above the wedge line. We came back and tested it. We've gone up into a 3 drive formation and back under this 14.488. It's going to be back inside the megaphone formation. That's going to be a negative signal. So if you're hoping for a continuation in the bull market, this is a level you don't want to see. Initially 14.9, and under 14.9, I think you can be looking at the wedge line coming in right now about 14.5. So good luck the rest of the trading day. Be patient, let the markets come to you. And we'll be back for our special guest, Helene Meisner, tomorrow, live on our YouTube channel. Helene writes a column for thestreet.com. She has a very interesting story and a huge following, and looking forward to talking to Helene. It's been a while since her and I have had a conversation, so make sure you're here for it. And good hunting. Nasdaq continuing to fade. This is the one that's my preferred short over S&Ps, over everything. I think it's the most stretched and the most sensitive to interest rate increases. And while we did this live stream, even after a very benign CPI, you have rates starting to fight their way back up. And similarly in the yen, not as much. And the dollar seems to be the weak sister among them all. So have a great day trading, everyone. Remember, don't just count your pips, count your blessings. Be careful if you're in NASDAQ stocks. I think you're going to have better buying opportunities more towards the end of summer, the beginning of fall. So get your shopping list ready. And I think that you could see it maybe 10% lower or so into that fall equinox, going into the dreaded month of October. So thank you for your attention, everyone.